What's something people don't know about the new budget? Sales tax rules have changed, and it could impact you more than you think. Let's break it down, quick and simple. Alright, so with the 2025 to 26 budget, the government's tweaked the sales and purchase tax system, aiming to boost revenue and streamline the process. First up, sales tax. Most goods and services will now see a standard rate of 18%, that's up from last year's 17%. A 1% jump might not sound like much, but it adds up, especially on big-ticket items like electronics or household appliances. The big news? Certain everyday essentials like basic food items, medicines, and textbooks remain tax-exempt. So your roti, doll, and kids' school books are safe from extra charges. But luxury goods and non-essentials are facing higher taxes, sometimes reaching up to 20%. If you're eyeing a new phone or designer trainers, expect to pay a bit more at the till. On the purchase tax side, businesses have to keep better records as authorities are cracking down on fake invoices and tax evasion. For ordinary shoppers, this means prices might be more transparent, but you could notice a slight uptick as businesses pass on costs. The government says these changes will help fund public services and reduce the deficit. But for you, the key takeaway is simple. Check your receipts, know what's taxed, and plan those big purchases wisely. That's your quick guide to the new sales and purchase tax rules in Pakistan for 2025 to 26. Stay smart, spend smart.